In today's show, JPMorgan says Bitcoin is 25% below its intrinsic value, and here's why it can catch up. JPMorgan Chase just released this full study on Bitcoin mining, intrinsic value, and open interest, which we'll be dissecting here in today's show. They also went on to say that Bitcoin's intrinsic value sits somewhere around $11,500, over $2,500 higher than the current market price. And what makes this also very interesting, we all remember JPMorgan CEO Jamie Dimon says Bitcoin is a fraud that will eventually blow up. This was back in 2017. He also went on to say, I don't really give a ish about Bitcoin. And that was on the eve of Bitcoin's 10th birthday anniversary. Jamie Dimon said he never intended to be the leader of the Bitcoin haters. And what makes this all so very interesting is let's take a look at Jamie Dimon's take on Bitcoin throughout the years. Back in 2014, he said, Bitcoin is a terrible store of value. In 2015, Bitcoin will not survive. In 2016, Bitcoin is going nowhere. And check this out, on September 12, 2017, that's when he calls Bitcoin a fraud. Then October 12th of 2017, I'm not going to talk about Bitcoin anymore. Then January 9th of 2018, after Bitcoin crushed $20,000 all-time high, here's what he said, I regret making that comment. And then he goes on to say, I don't really give a ish about Bitcoin. It's very interesting to see his position as now Chase is embracing the leading crypto asset. Also in today's show, Bitcoin risks falling to 8K as the S&P 500 stares at its potential big short. That's right, a bearish fractal in the S&P 500 that historically leads the index lower may prove equally fatal to Bitcoin. We'll be breaking this down in today's show. We'll also be taking a look at the overall cryptocurrency market. As you can see, Bitcoin back in the green. Most of the major cryptos are following Bitcoin, also in the green. But where's the Bitcoin price likely to go from here? Find out all this plus so much more in today's show. Here at Crypto News Alerts, I drop a brand new episode every single day. So be sure to smash that subscribe button and click that bell icon to receive notifications of the latest premium crypto news. And before we kick off today's show, if interested in learning from the Wall Street legend Teeka Tiwari, who picked Apple back in 2003 and Bitcoin in 2016 as he shares his #1 pick for the 2020s, they're calling it the investment of the decade. Right now, there is a mad rush in corporate America. It involves Amazon, Google, Microsoft, and Facebook. They're all betting on a new technology that the World Economic Forum projects will soar 295,000% over the next 7 years. But it's not AI, the Internet of Things, or 5G. To discover what it is, click the link below this video in the description and watch this exclusive presentation with the one and only Teeka Tiwari. All right, welcome back to another episode of Crypto News Alerts. JPMorgan says Bitcoin is 25% below its intrinsic value, and here's why it can catch up. Although JPMorgan may not trade Bitcoin or offer crypto-specific services to its clientele, the company does analyze this nascent market once in a while. This much was made very clear recently. One individual this week shared a report from JPMorgan dated May 22nd that included a post-halving analysis of the Bitcoin mining scene, and this comes from PIQ on Twitter. As you can see, JPMorgan, full study on Bitcoin mining, intrinsic value, and open interest. And I'll include this in the show notes below the video in the description. But first, allow me to give you some of those highlights. Analysts at the multinational financial institution. And let me also point out that JPMorgan Chase is the largest bank in the United States. They found through their analysis of Bitcoin's intrinsic value that Bitcoin is currently trading 25% below what the intrinsic price should be after the halving, or would be after the halving, as they put. The intrinsic price JPMorgan found was derived through the average cost of mining 1 Bitcoin, while the analyst suggested that no concrete signals can be garnered from the fact that the crypto is below its intrinsic value. Analysts think that Bitcoin will eventually catch up, and I agree 100%. So as it stands, according to JPMorgan analysts, Bitcoin's intrinsic value sits somewhere around $11,500, over $2,500 higher than the current market price. As we can see right here, Bitcoin is up about 1.5% for the day, trading at $8,867. Most of the major altcoins are also back in the green. Ethereum up 0.22% for the day, trading at $202. XRP up 0.5%, trading at 19 cents. We got Satoshi Vision down 1%, trading at $183, and Bitcoin Cash down 0.19%, trading at $228. So while the price may seem miles away, it's attainable due to the fundamental trends. Blockchain Insights firm Sentiment shared on May 21st that Bitcoin's network value to transactions ratio, which is the NVT, remains healthy, suggesting prices may soon resume higher despite the recent drop. Here's what they're quoted saying: in spite of Bitcoin's mild negative 4.4% downswing today, its NVT looks healthy and our model is showing a semi-bullish signal. The amount of unique tokens being transacted on the Bitcoin network is slightly above average for in May, according to where the price levels currently sit. Sentiment wrote. Block Tower Capital, a cryptocurrency and blockchain investment fund, echoed the optimism. In a note, the firm said that the macro case for Bitcoin has never been more obvious. It attributed its optimism to multiple trends, such as growing distrust in central banks, the world's adoption of digital technologies amid the ongoing illness, and growing geopolitical tensions as economies break down. JPMorgan's latest report about Bitcoin comes as JPMorgan and Chase has begun to service crypto native clients for the first time ever. This is extremely bullish news. As reported by the Wall Street Journal 10 days ago, the bank has taken on two top Bitcoin exchanges, Coinbase and Gemini Trust, as clients. People familiar with the matter said that the accounts were opened and approved in April, and transactions through the account have just started to be processed. The bank is primarily providing cash management services to the firms and handling dollar-based transactions for the exchange's US-based customers, according to the People. Now, this is extremely bullish, and what does it tell us? It tells us that there's institutional demand for Bitcoin, especially from JPMorgan's clients, or they wouldn't already be doing business with some of the top bridges for the cryptocurrency. According to Michael Navigrat, CEO of Galaxy Digital and a former partner at Goldman Sachs, this news is a massive deal, a big deal. In fact, the Wall Street Investor remarked that the firm's acceptance of cryptocurrency clients is a sign of recognition that the future will include cryptocurrencies, digital assets, and blockchain-based systems. Here's what Michael Navigrat shared on crypto Twitter. He wrote, the JPMorgan announcement that they will be providing banking services to Coinbase and Gemini is a big deal. Go BTC. It is recognition that the future will include cryptocurrencies, digital assets, and blockchain-based systems. And now for our next story of the day, Bitcoin risks falling to 8K as the S&P 500 stares at its potential big short. And before we break this down, let's take a look at some of the volume from the top exchanges in the world. Binance is down 26% with 4.6 billion in volume. Huobi Global down 35% with 3.3 billion in volume. OKEX down 16% with 2.4 billion in volume, and BitMEX down 33% with $1.7 billion in volume in the past 24 hours. So let's break this down. A bearish fractal in the S&P 500 that historically leads the index lower may prove equally fatal to Bitcoin. Let's discuss it. The US benchmark is trading between its 50-day moving average and the 200-day moving average since April 6th of 2020. Moreover, the index is nearly 50 points lower than the 200-day moving average, a metric that forecasted changes in the direction of the trend that leaves the S&P 500 with adequate room for a correction. So these two veterans agree that there is a bearish forecast around the index. One of them is Jason Goperf, an analyst at Sundial Capital Research, who says there's a 72% chance of the S&P 500 breaking low. In a statement to Barron, Mr. Goperf cited the 30 instances from the past wherein the US index was trading between the 50 and 200-day moving average, with the majority resulting in average downside corrections of 12.7% in the next 6 months. Here's what he's quoted saying: buyers haven't shown enough oomph to make any progress lately, he said. When that happens during downtrending markets like we've been in, with the protracted stretch near but below the 200-day average, it has indicated larger problems that has almost always meant further weakness ahead. The other analyst is James McCormick, a macro analyst at NatWest Markets. The market veteran wrote in a report that if the S&P 500 breaches above its 200-day moving average, it reflects changes in positioning by commodity trader advisors, predicting there's going to be a big short in the US stocks. So will Bitcoin be a collateral damage? Well, the bearish predictions for the S&P 500 come at a time when positive correlation with Bitcoin has surge higher against the global health pandemic. Yeah, I said that, pandemic. Researchers at the University of Sussex Business School found that their trends proximity grew stronger in March 2020, rising to 63%, and then later in May, the correlation dropped to near 40%, which looked unsettling for Bitcoin as the asset remained uncorrelated to the most traditional assets in its 11-year lifetime, right? Moreover, Bitcoin is undergoing a bearish correction after failing to break above $10,000 once again, a crucial resistance level on more than 7 occasions in May. Holy moly, we need to break that $10,000 resistance once and for all. The move downhill has stretched its downside targets to lower 8,000s around its 200-day moving average. So if the S&P 500 plunges against long positions, it would lead the battered investors to dump their holdings elsewhere to cover their margin positions. The same had happened during the March 2020's global market rout, where even gold, a traditional safe haven, plunged alongside the US stocks. So let me know where you think Bitcoin stands from here. Do you think we will revisit the lower 8,000s, potentially $7,000 levels and correct? Or do you feel we're going to go up and maybe revisit and retest that $10,000 critical resistance? Let me know your thoughts in the comments right down below. Now let's check out the overall cryptocurrency market cap, sitting at 248 billion with 97 billion in volume in the past 24 hours, and the current BTC dominance is 65.6%. And taking a look at the top gainers within the top 100, we have Theta leading the pack once again, up 23%, trading at 44 cents. Matic Network up 16%, trading at 2 cents. Zilliqua up 15%, trading at 1.2 cents. Engine Coin, Go ENJ, this has been very bullish as of recently, and I'm very bullish on this for the long haul, up 13%, trading at 19 cents. Hedera Hashgraph up 11%, trading at 4 cents. And Loopring up 11%, trading at 4 cents. Now for the biggest losers within the top 100. Within the past 24 hours, we have Ren down 7%, trading at 9 cents. Hyperon down 5%, trading at 43 cents. Theta Fuel down 4%, trading at 1.6 cents. Energy down 4%, trading at $2.33. Blockstack down 2.5%, trading at 12 cents. And Verge down 1.9%, trading at 0.004. And now checking out the BitMEX margins, we can see the bulls are back in control, leading with about 79 million in superiority in the last 24 hours, with longs leading 52% versus 47% shorts. Are you currently bullish or bearish on the king of cryptos right now? Let me know your thoughts in the comments right down below. And now checking out one of my favorite indicators is the Crypto Greed and Fear Index. Shows we're currently rated a 39 in fear. Yesterday was a 41, and last week a 50, which was neutral. And last month we were in a 21 in extreme fear. And if you're not familiar with the Crypto Greed and Fear Index, extreme fear can be a sign that investors are too worried. That can be a great buying opportunity. And when investors are getting too greedy, that means the market is due for a correction. And I want to encourage you to check out the description right below this video by clicking show more in the description right down below for a detailed analysis of what's going on in the market. This goes for all 430 plus videos right here on my channel. Also has some very helpful resources for you to plug into, including the blog to my podcast, which could be found at cryptonewsyes.com. Not only is this updated every day, it also allows you to download the latest episode of the show in MP3 format so you can listen to it when you're working out, on your way to go, on your way to work, or just doing your thing. Also, be sure to subscribe on YouTube. My direct link to subscribe directly to the channel is cryptonewsalerts.net. I greatly appreciate your support. You can also follow us on Apple's iTunes, Spotify, Google Play, Stitcher Radio. So whichever podcasting platform you're active on, please do help support the show. You can also follow us on Twitter to receive daily crypto news alerts. My Twitter handle is Crypto News Yes, and I also have a private crypto Facebook group entitled Crypto Alchemy. To become a part of this, simply click this link, request to join. I'll be sure to plug you in. And for those of you active on Telegram, I do have a crypto Telegram chat. And if you want to become a part of this, simply click this link, request to join, and I'll be sure to plug you in. Well, that's going to conclude today's show. As always, I appreciate you tuning in and journeying along with me inside this incredible crypto revolution. If you gain value out of today's show, be sure to smash that subscribe button and click that bell icon to receive notifications of the latest premium crypto news. And real quick, before I go, if interested in learning from the Wall Street legend Tika Twari, who picked Apple back in 2003 and Bitcoin in 2016 as he shares his #1 pick for the 2020s, they're calling it the investment of the decade. Right now, there is a mad rush in corporate America. It involves Google, Microsoft, Amazon, and Facebook. They're all betting on a new technology that the World Economic Forum projects will soar 295,000% over the next 7 years, but it's not AI, the Internet of Things, or 5G. To discover what it is, click the link below this video in the description. It'll take you here and check out this exclusive presentation with the one and only Tika Twari, and I look forward to catching you on tomorrow's episode. Peace.